Let's talk about undervalued stocks. What are undervalued stocks? It's no different than anything else. Let's say you're buying a business. Let's call it a candy store. You're buying a candy store. The guy wants $100,000 for his candy store. Nah, forget that. Let's talk about McDonald's. You want to buy a McDonald's franchise. They run about $1 million today. You've got to put up probably $100,000, maybe $200,000, and McDonald's financing through its banks will loan you the rest of the money. Now you say, okay, I put up $200,000 cash. The business cost $1 million. What does the business throw off per year? What's my income per year from the business? Let's say your income per year from the business is $250,000. So you've got $1 million business for which you put up, let's say, $100,000 cash. You have to work in it, and it throws off $250,000 a year income to you before taxes. Well, that's a pre-tax return, $250,000 on $1 million business of 25% per year. That sounds like a pretty good business. However, you got to work full time at it. So if you can make $100,000 somewhere else, just working for somebody, and here you're going to make $250,000, you figure, well, I'll be able to make another $150,000 above my own work output. So now that would be a 15% return on $1 million investment, $150,000 on $1 million commitment. All right. But the other way you got to look at it is, well, I only put up, let's say, $200,000. The bank put up $800,000. So on my $200,000 that I put up, I'm using 5 times leverage because the bank put up $800,000. I put up $200,000 of the $1 million commitment. So I'm using 5 times leverage. So you say to yourself, that's a pretty good deal because I only put up $200,000 and I'm making $250,000 per year. That's how you figure out what an undervalued stock is. It's by saying, what is the stock truly worth? What are the pieces of the company worth? If we take the pieces apart of the company and sold off the pieces, let's say the stock is selling for $50 a share on the New York Stock Exchange, but all the pieces, if I broke them up together, are worth $100 per share. That means the stock is selling for 1/2 of its real value. That's what we mean by an undervalued stock. The other way to determine it is on the basis of earnings. Let's say a stock is selling for 10 times earnings, and it's a great company, and all its competitors for some reason are selling at 15 times earnings. Well, then my stock at 10 times earnings is undervalued relative to all its peer group. We call that its peer group, its competitors, selling at 15 times earnings. That's also how you determine undervalued stocks. In my company, stocksatbottom.com, that's what we do, undervalued stocks all the time. We look for what's called value stocks, undervalued stocks. We also, and you got to be careful about this, in this market, you got to watch out for value traps. You want to know more about this? Come to the website, stocksatbottom.com. Thank you and have a great day, and good luck to you investing.